Welcome back, investors. Jake here. I don't know how you spent your weekends, but obviously I spent my weekends watching YouTube videos from other finance YouTubers in order to learn as much as I can from the experts, guys. And what I'm learning is that we are screwed. According to the other largest finance YouTubers on the platform, the stock market is going down, my portfolio is screwed, I'm going to lose everything. I should do like Meet Kevin and sell my entire portfolio. He dumped his $20 million portfolio of stocks, options, at crypto after he lost $12 million, but he's now shorting the market because he's confident. He's telling his 1.78 million subscribers that the market is going down further. We are in trouble. Okay, so I haven't looked at the market today. Let's check in with CNBC, and what? The S&P is up 1.42, Dow Jones up 0.76, NASDAQ up 2.6. VIX volatility has dropped by 9.1%. That's kind of suspicious. This isn't what all the other finance YouTubers are telling me. Obviously, guys, I'm just joking around. People can believe whatever they want, say whatever they want. It's up to you as the viewer of who do you want to get your advice from? Whose opinions do you value? And if you're going to ask someone for their opinion of when do you think the stock market is going to crash, the only responsible answer that anyone should give is nobody knows. Nobody knows what the market will do next week, next month, 6 months from now. Nobody can predict the future. However, this is an opinion channel. If you guys are watching my videos and subscribed, you want to know what I think. And I was never concerned that this sell-off in the broader market was ever going to last. And I think we need to distinguish what I mean by the market. And on my channel, when I talk about the stock market, I mean the S&P 500. I mean America's largest, most successful, most well-known 500 companies. And the S&P did experience a 9.5%, almost 10% sell-off from the top. So this was market correction territory. However, we have to wonder what caused this sell-off from the high when the S&P peaked at 4,700. And the bubble that is bursting right now, I don't think it actually is the S&P 500, the broader market. It's this extra fluff that's come onto the market the last 2 years. I think in the last 2 or 3 years, we've had over 2,000 IPOs and SPACs that have just gotten terrible valuations, guys. You can think about Robinhood and Peloton and, Rivian and all these EV and electric vehicle stocks. They're all objectively overvalued by every traditional metric. Those are the ones that are causing a panic as growth in the future might slow. They're the ones selling off. And to illustrate the difference here, let's look at the performance of Vanguard's VOO. This is the S&P 500 Index ETF. Over the last 6 months. Over the last 6 months, guys, we're positive, 2.2%. So even though, yes, we sold off 9%, we're basically back to where we were 6 months ago. However, when we look at Vanguard's Extended Market Index Fund ETF, this includes all of these thousands and thousands of SPACs and IPOs that are just garbage. The index fund can't distinguish between a good company and a bad company. It just buys everything. So VOO is America's 500 largest companies. VXF is everything else. And yes, there are a lot of value small caps out there that are great companies that are not in the S&P. But these indexes have to buy all of these junk IPOs and SPACs as well. So while VOO, the S&P, over the last 6 months is up 2.2%, the extended market is down. It's down 12.7%. And this disparity between the two indexes of the S&P versus everything else, I think is just going to widen over the next 2 years. So as a lot of these IPOs and SPACs can't turn a profit and they run out of funding, they can't basically issue new stock or find new investors, their share prices of their companies are going to continue to decline. Many of them will become bankrupted or become delisted, or they'll get bought out by a larger company for pennies on the dollar of potentially what their future worth could be. So if you're holding small cap index funds or perhaps total stock market funds like VT Sachs, these include these thousands of IPOs and SPACs that are all selling off huge. They're basically in tailspins, and I don't see it correcting. So I want to share with you guys what I did in my account on my channel. I made a video the Friday before last when Meet Kevin sold everything and then shorted the market. I bought call contracts. I was looking at the technical indicators. This is the stochastics for the S&P 500. And the market was just screaming, it's oversold, it's oversold. People have to, at least in the short term, buy back in. The selling can't sustain itself. So I bought 4 call contracts on Friday. On Monday, the market opened down huge, so I basically doubled up. So if you're curious, I'm still holding these 12 call contracts. My cost basis for these 8s with a strike of 430 on SPY was 12,500. My 4 for these contracts, strike 445, was 5,700. I did go negative on the 445 last week as there was a drop on Monday, but the market is up huge on Friday. I think it was the biggest one-day gain for this was Friday. The biggest one-day gain for the S&P of like 2.5%. The S&P is positive right now, so I'm up almost $8,000 on these 12 call contracts, and I could just sell them for a profit, but when you look at these technical indicators, I think the buying is going to continue. Are we going to get back to all-time highs? Maybe not, but I'm not feeling the pressure anymore that a sell-off is going to continue. And the reason why I'm so confident, guys, and I'll tell you exactly my opinion when the stock market will crash, and it'll crash when the money runs out. Right now, if everybody is selling, then they're going from securities to cash. They have cash sitting in their account. Well, what are they doing with it? Crypto is selling off. The real estate market is at all-time highs. People have money and they want to buy stocks. And they're going to continue buying stocks as long as the profitability of America's largest companies is still there. So when we look at the holdings for VOO, the S&P 500, these are the 10 largest companies. This is 30% of the index, 30% of the market. Apple, Microsoft, Google, Amazon, Tesla, Facebook, Nvidia, Berkshire, United Health Group, and JP Morgan Chase. And when these companies deliver their fourth quarter earnings, it's all good news, guys. They're growing top-line revenue, they're growing bottom-line net income, they're doing stock buybacks, they're increasing their dividends. Why would you not want to buy these companies when they're reporting good news? So obviously we haven't heard from all of these companies yet, but when we look at Apple, they reported on the 27th. They beat their earnings per share estimate by 11%, good news. When we look at Microsoft, they beat their earnings per share estimates by 7.3%, good news. When we look at Tesla, they beat their earnings per share estimate by 7.6%. When we look at Nvidia, I guess they don't report until the 16th. We'll do a couple more of these. United Health Group, they report an earnings beat by over 4%. JP Morgan Chase, they reported on the 14th by over 10%. We'll do a couple more big companies, guys. Johnson & Johnson, barely, but yeah, they did beat on earnings. And then we have Visa. They beat by 6.4%. So when is the stock market going to crash? And I think it'll be when these companies start missing earnings, when America's largest, most profitable, successful companies in the index can't meet earnings, or even if they miss earnings, they could still be growing revenue. The worst case scenario, guys, where the market could seriously lose 30, 40, or 50% is if these companies stop growing. If their top line revenue decreases year over year, I mean, that's a pretty terrifying scenario, but that is what would cause the stock market to crash. So everybody's worried about inflation. However, inflation isn't going to cause the market to crash. Inflation leads to the Federal Reserve raising interest rates. Okay, does the Federal Reserve raising interest rate cause the market to crash? And I would argue that even then, the Fed raising interest rates might not crash the stock market. And the reason why, guys, is look at where the federal funds rate has been in the past. In the 1990s, it was 5 or 6%. In the 2000s, it was over 4%. And even recently, as 2018-19, it was at 2%. And America's largest companies were still growing revenue. They were still profitable. So if we get 4 or 5 rate hikes this year and the federal funds interest rate goes to 1%, 1.5%, I mean, we were at that 2 or 3 years ago and the stock market was doing fine. I think people are overestimating the effect that raising interest rates has on the stock market. Now, does this mean we're going to have a year where the S&P goes up by 28%? No, I don't think that. I think the stock market will probably just trade sideways in this range. I think if you're, paying attention to the market day to day, you're going to have these periods where you're going to see a 9 or 10% sell-off. It's then just going to snap right back over the next month. Sell off, snap back. Will we hit 5,000 for the S&P? I actually think so. I think at some point this year it will get there. But I'm not concerned about inflation. I'm not concerned about the federal funds interest rate going up. The only thing that's going to shake me, guys, and make me say the party is ended is when these companies stop growing their top line revenue and they can't remain profitable anymore. Okay guys, that's all I got to say for this video. If you want to support my channel, give me a thumbs up, really helps out. If you have any comments or questions or thoughts of your own, let me know down below. I love hearing from you guys. Till the next video, take care.